We are live with Interchain Live. Stephen Farrington, Ryan Munn here, talking about Bitcoin, blockchain, cryptocurrencies, smart contracts. Today, we're probably just going to talk about the market. Everybody's a little depressed about it. Everybody's a little bummed. But, you know, I just had a great conversation today, hosting a meetup here at the CoWorks space. And a gentleman show up who says, you know, I just bought it FOMO and I'm embracing it. And what he's talking about is he got it in January and he's embracing it, right? Because it is so obvious that there is still so far to go, right? It's so obvious that this technology has not permeated society, that we are not using it in its fullest capacity, that it's barely scratched the surface. So those folks that have gotten in recently, you know, granted, he was pretty exuberant, but I think that we've got a lot of the market out there that is a little bit hesitant right now, but they see that there's a lot of potential on the horizon, and they're not necessarily jumping ship. On the other hand, what do you think is keeping it down, Stephen?
FUD.
FUD.
If FOMO was keeping it up, it's FUD that's keeping it down.
That's right. That's right.
No, I still leave open the possibility that there's a lot of manipulation going on. Mostly to manipulate the psychology, right? Anytime you see a clear, what's been happening weirdly lately is there used to be, in my opinion anyway, and this is very subjective, but I thought the market signals for technical trading used to be much more reliable. Right. If you saw a bull pennant or some other, a head and shoulders top or whatever, dead cat bounce, you could, with a fair degree of reliability, make money off a proper call. And that seems to have gone out the window since, I don't know, around the middle of January. Yeah. At least for me. Because I was able, I have a small amount that I do just sort of trading with, in addition to what I'm holding, and just to hone the trading skills and try to get better at it. And I used to be able to consistently make money. Now, it might have been just because the general trend was upward all the time.
Right.
I with that, but do better than the market. Do better than the average. And now I guess I've been able to preserve more than the losses that have hit the rest of the market with that, so I shouldn't complain. But it seems to me, at least anecdotally, that the signals are a lot more, even when there's a clear signal, it's less reliable. And I haven't ruled out the possibility, like you and Roger were previously noting, that someone had made a conspicuous purchase of something like $300 million worth of Bitcoin to a single address. It was accumulating it. And you may recall, everyone was trying to guess, who was doing this. It was a very low market, I think. I mean, it's a good investment at that point. But, someone I talked to said, hey, maybe central banks are buying it up so they can dump it quickly when they want to push the price down, right? And that wasn't a well-received idea. And I remember responding with, know your enemy, right?
Right.
The art of war. And then we've got, I haven't been watching the news for whether anybody's reported on movement of the, was it about 1.9 billion of Mt. Gox assets still hanging out. And
that. Who knows how true or valid that story is, right?
What's that? About those addresses?
Well, and about the nature of the story, right? Because you can see the movements on the blockchain, but it's hard to say what's an actual sale occurring in a market versus a movement of the blockchain. And to the point of that large transaction we were looking at before, an exchange could be consolidating their old non-SegWit wallets into a SegWit wallet before distributing it to a bunch of individual SegWit wallets, or just, moving from, one vault to another, or exchanges themselves actually, accumulating some capital reserve of Bitcoin.
I thought that the evidence trail did point to definitely some of that original Mt. Gox holdings in 2,000 Bitcoin increments that were all, systematically liquidated.
That's the story I read also, that it was being, he had worked with some
there was
exchanges to do
the
that.
annual report of the trustee stated the days at which he moved these things onto an exchange for liquidation, and then somebody matched that up with the 2,000 Bitcoin blocks matching the amount of assets the guy said he moved, being sold on the exchange, within the day of when he moved it on the exchange, right? So they matched all these big sales up with the exact amount that he said he had liquidated.
So then the question is, like, is that A, manipulation, B, is that one set of transactions enough to really have been sort of the cause of the recent market change? Or is it really just a series of coincidences that are taken advantage of by the propaganda machines to enhance the downward trend in this particular time frame?
Well, I don't think anybody said it was manipulation. I mean, as a trustee of the assets of Mt. Gox, representing the interests of the plaintiffs in the lawsuit, right, or the creditors, he was trying to preserve their capital,
right?
But what he was doing was essentially continuing to sell, even though his selling was driving the market down, because he was kind of panic selling,
right?
And yeah, everyone jumped on that. At least that's from the numerous stories I read about it, because I was trying to figure out, is that enough volume to really move the market?
Right.
But if it's enough to cause a sudden movement by wiping out a bunch of orders on the book, then it's enough to spook people.
Yep.
And have them keep selling, right?
Yeah.
But no, I don't think it was conscious manipulation. In fact, it was against his best interest. He wanted to preserve the capital. But hey, Seth, welcome aboard.
I think he's Seth. You there?
Muted.
Unmute him. That's all right. So, the other thing that's interesting too is that some folks might recall we had a couple sessions back. We had a gentleman, Brendan, on talking about his analysis of the miners' economy and how that affects the Bitcoin price. And he's talked about a pretty solid bottom, which we didn't quite get that low. And I would hypothesize that the reason we didn't quite get that low is because the bottom of Bitcoin has been sort of supported by the consolidation of the alt markets, right? So as more and more people, even though in some of these it still looks like the alts, even though they've gone red, they come back too when Bitcoin comes back. You actually look at their Bitcoin values, a lot of them have continued to decline. You can see the top trending coins are getting further from Bitcoin. And so that, I think, has contributed to preserving the resource. Preserving the bottom of the Bitcoin price as there has been all this selling, while at the same time, anybody who's in some other alt that's wanting to get out of it and deciding that they want to get out completely, they're selling out to Bitcoin before selling to fiat, and their sale of a similar volume of currency in an alt market has a bigger impact on the price than their sale in the Bitcoin market. So in other words, if somebody has $10,000 in some obscure coin that doesn't have a ton of liquidity and trades, maybe $1 million a day, it seems like a lot of liquidity, but still really not. And somebody sells $10,000 worth, it might drive the price of that coin down by 0.5% or 1%. Whereas $10,000 on the Bitcoin market, changes the price like a couple of pennies, if that. So we have the market consolidation effect actually supporting the bottom price points of Bitcoin, in my opinion.
So I'm curious, I did not catch Brendan's interview with you, and what did he say this bottom was based on the miner economics?
He was referring primarily to the cost versus profitability of the miner, and basically saying that at a certain point, the value of the coin is not enough higher than the cost of running the miner. And so the miner who's in it for business will typically turn off the miner to reduce to take the power bill, remove the power bill for that period of time when the coin is down in value.
Right, or switch to another coin.
Or switch to another coin. Yeah.
But then how does that affect the price? Because the blockchain is not being secured as rapidly, the transaction fees are going up.
Sort of, yeah. So because it's not so much the transaction fees going up as the transaction fees being delayed, right? So a 10-minute block turns into a 10-minute and 30-second block, turns into 11-minute, turns into a 12-minute block.
Yeah.
And as that's happening, the miners receiving rewards are receiving bigger rewards, but it's taking them longer to get them.
Mm-hmm.
And these dynamics all impact the market in terms of what's being sold on the market. And the miners that are still receiving rewards tend to hold the coin because they don't want to sell it on the market when the market is down. And commercial business miners are presumably managing their cash flow and their capital allowance. So they sell or buy hardware when the price is high, and they hold when the price is low. And if the price gets too low, they pull the plug on some of their power consumption to reduce their expenses so they can hold longer till it comes back up and they can sell and then plug it back in and bring those expenses back on. Now you also there's a component to this cycle that he didn't discuss too much, but I kind of touched on, which was at a certain point, the hardware expires, right? The hardware stops being so profitable. Now there's bound to be a curve here where hardware is being released early to major miners that are perhaps vested in Bitmain or have inside connections. And so when Bitcoin's at 20,000, what do? They buy hardware with their Bitcoin while selling all their used hardware on the used market, driving the price down of the hardware, driving the price of Bitcoin down because they're buying hardware with it, which presumably the seller of that hardware is liquidating a bunch of that Bitcoin to cover their costs. And then you have a prolonged dip because you don't have the miners buying back in on the dip with the capital they've held from selling the coin, because this time they bought hardware instead of selling the coin. And so now they have the next generation past the S9 running and mining Bitcoin.
It's like a strange attractor, you can model that with chaos dynamics, chaos physics.
Yeah. I would also say that the drop in transaction fees probably have a bit of an influence on the whole thing as well.
Hi, Seth. He's back.
Hey. Oh, you're muted still.
I do that so you don't have to hear my kids running around in the background.
Yeah, right on.
Hi.
So I have a chart up here, and you said, we didn't see the bottom that, Brandon would have predicted, but, the bottom we saw is only 3 days old, right, on the one-day chart. The bottom before that was before you had Brandon on the air, that the bottom around 6,000, right? So
right. Yep.
Could it be that we just haven't seen the bottom yet? Because on this chart, we're seeing continued downward trend, and we just happen to be on a little upset current.
Well, yes and no. So I'd say the bottom we saw there was a good 50% above his bottom. And now where we're at, his bottom is already up another 9% from where it was then. So his bottom, his theoretical bottom, is I think we were looking back historically, and he could really only go back so far before the data got inconsistent. It was like 2015, 2014, and then it was a little bit inconsistent. But from that range, basically, it's never really hit the bottom except in 2015, when it hit the miner's bottom in the fall of 2015. Beyond that, it looks like it's never really hit the miner's bottom. It's always stayed above it. But there is also another chart that he was showing that kind of demonstrates this overbought and oversold point on based on the hash power, and demonstrates how the maturity of the Bitcoin market can be seen based on its correlation to that hash power versus looking at Litecoin or Ethereum, where the price correlation is very divergent or uncorrelated to the hash power.
2015. This is a log scale plot now to kind of level it out in private. Oh, this guy here.
There you go.
That's the first data coming up. This, I'm looking at Coinbase's prices.
Okay.
So this is whatever their exchange was doing at that time.
Whoa.
Yeah, $108 then.
I think that's the one where he was saying it had hit basically the miner's bottom that one time.
The reason I actually showed my chart, Ryan, is I want to ask you what you make of this. This sort of like the volume on the volume chart, right?
Yeah.
We're chugging along here, and we have these spikes, and everyone, people sold off. It was a good buy back here in September last year. We get in, Christmas, the Thanksgiving and Christmas frenzy, New Year's, and then all of a sudden, okay, so Christmas vacation starts, right? 12/23. All of a sudden, the volume is just.
Yeah.
Oh, is this where? This is where Coinbase said that they were not onboarding anybody anymore because they couldn't keep up with the know your customer requirement.
That's right. Yeah.
But that lasted all the way until 2 weeks ago.
There's something funky about that then. That's crazy.
Yeah. So if I'm just going to go find another.
Yeah, you're right. That's not right at all. Look at that.
Yeah, well, there's been significant variation within it. If I zoom in on that,
yeah, I'm sure. But
period, there's been, and I got excited, after this low of 6,000 when they're like a little bit up. Wow, 140.
Yeah.
But that just struck me as when I looked at that chart a couple days ago. It struck me as that is really odd that it was such a flat base level with so little noise or variation about the bottom.
Yeah.
Like historically, that definitely doesn't jive, even if you zoom in on that. Wow.
Cabal, man.
Yeah, no, it's a real thing, dude. No joke.
January 1st.
What's that?
They all sold out January 1st.
What did you call it, though?
Oh, the
Cabal.
The Cabal.
Yeah, the Cabal. It's the nefarious term.
Right.
For the Illuminati.
Cabal, sure.
Controlling it all.
That was when that was when Masonic coin launched, right?
Yeah, probably. Oh, that's a whole nother thing. That guy still hasn't gotten back to me, by the way.
Yeah.
Like, dude, like you're gonna get your ass thrown in a Masonic trial. That's worse than regular. I'm not gonna, but yeah, you don't want to do that.
So I was gonna try to find a different exchanges. I can't remember where to find it here. But let's keep talking markets while I'm doing that.
What about let's try Bitcoinity.
Go to a different site altogether.
Yeah, that's what I'm gonna pull up Bitcoinity and see what I can get for
vacuum that rabbit thing out if you need to.
5 years. Oh yeah, look at that. Oh, that's a little weird too, though. Oh, so there's something else actually that I'm not seeing on your chart, which is the excessive. Oh wait, that was 2017 you're looking at.
This?
Yeah. That drop off. January 2017, not 2018, was it?
No, it's 12. This is 12/25/2017 right here.
Oh, okay.
That's December. Because they have Christmas.
In 2017, if you look at Bitcoinity and you look at the 5-year trading volume history, you can see a huge drop off, and because there was all this artificial trading happening on the Chinese exchanges. And as soon as China, COPB, came in and shut it down, all that trading stopped.
Well, see, here's the 5-year. Oh, you're talking about this right here.
Oh, let me, yeah. Yeah.
because we'll see that on. We should see that on the 2-year too, in March or April 2017.
No, it should be January. No, click on trading volume alone, not without price, and then click on the 5-year. And there you go. See it? January 2017. And it just drops off.
Oh, this. Holy moly.
Yeah. So all of that, if you look at that, the brown, green, and blue are.
Oh, yeah. So there's like Huobi,
yep.
OKCoin.
And BTC China.
And BTC China. Yeah, they just evaporated. Boom.
Yep.
Gone. Whoa. BTC China was a short-lived endeavor.
All that volume, though, was artificial. It was like the exchange moving coin back and forth or something. There was like tons of activity on there that was artificial activity.
Oh, interesting.
And then there was also volume. And then you can see, actually, if you look at the price charts there too, after that, you can see like of Mt. Gox exchanges selling their Bitcoin that they didn't need in reserve for the margin trading anymore.
So I'm just going to look again at the last 6 months here at the other exchanges volume. Yeah, and so Coinbase is the purple.
Yeah, if you click any of those, it'll remove them from the chart too.
Right. So, but where we saw the Coinbase volume just drop was through this whole period here, and it doesn't look like it's. If I click only that, I should. Oh no, sorry. Remove all the others.
Yeah, you can go down to exchange too and select exchange and select Coinbase.
Yeah, I'm already there now. And see, this isn't showing what the API is feeding to TradingView.
Right. Now, I've also noticed with TabTrader, because I use that all the time, like my GDAX APIs are messed up half the time. There was a big drop-off, like weird thing in July where certain charts, like if I was looking at the 1 hour, 4 hour, 1 day tickers, they were all messed up. Like it would only go back a little while, and then they were like missing months of data.
So remember a few minutes ago, I said that, you know, the market signals have been less reliable.
Yeah. That's
because I'm doing everything in TradingView, and volume movements are not matching up with what's going on here. But now I realize it's because TradingView probably has a faulty API feed.
Yeah. So good.
On-air epiphany, huh?
Yeah. Well, and that's, you know, to that point, actually, that's why I also, like I said, I do all my trading with TabTrader, but I do bounce back and forth looking at, like if I'm trading on GDAX, GDAX has some good depth charts on their web interface. So I'll bounce back and forth to look at the depth charts on GDAX directly while looking at the trading charts and volume in TabTrader.
Sure.
I'm curious now. That's GDAX, Bitcoin US dollar that you're looking at, right?
It was GDAX, Bitcoin US dollar, yeah.
Now
well, Coinbase.
What the volume looks like.
The same as GDAX.
It should be.
And here's the 4-hour chart, for instance, right? And we see that whole volume reduction all through there too. Actually, I'll give you the whole span. See?
Oh yeah.
Boom! It's just this real low baseline.
See, now this is interesting though. I don't see that on my GDAX chart.
Can you turn that around?
Yep. Let's see if I can.
On TabTrader, you don't see that.
Right. So I don't see.
Ah, wow. Yeah, in fact, you have a volume increase through this whole period. Right here, that I'm kind of. I'll draw a line around it.
Yeah.
Around here.
Well, now maybe you are getting Coinbase. Maybe there's a different data set from Coinbase versus GDAX. And what you're getting is the Coinbase data set, which refers to the retail consumer end of buying and selling versus the GDAX live trading book.
Yeah, that's a good point. But unfortunately, these TradingView, I got to switch to Tab Trader. TradingView doesn't pick up the GDAX API.
Oh, it doesn't?
Feed, no.
Really? That's interesting, because TradingView is like one of the most popular tools for traditional traders, isn't it?
I don't know. It seems to be. I mean, there's a lot of, they have this idea sharing community. I don't participate much in it, but there's a lot of trade ideas. It seems to be Forex and metals traders, gold and precious metals.
Oh, gotcha.
More, of course, that's where you're going to find the technical trading community, right? Because it's less fundamentals based and more market psychology based. So,
right.
Yeah, but I just have done well. We don't have to deal with my trading problems. Let's move on and do something of interest to viewers.
Today, trading gets you in trouble. You know, it's not worth the lost sleep.
Well, I got to say, I've been losing a lot less sleep lately because I've been sitting it out on that with that amount.
Just hold out, right?
And that's another tough thing about it, right? Because all the action happens in the middle of the night.
Right.
Oftentimes there are major price swings. There was
because of the time differential?
On Medium who did a data analysis with his big data tools and Python and whatever, and he just looked at what happens, you know, what's on average the lowest priced hour of the day, and what's on average
I think I read that, right? It's like buy at 11, sell at 12.
Yeah, and then he just basically ran a simulation and said, what would you do if you just bought at 11 and sold it? Well, I think it was bought at 11 and sold at 10 the next morning. But
yeah, something like that.
It was a pretty good strategy. He set up a bot to do it.
Yeah, I like that. Yeah.
So unless you can code something that's going to buy at a certain time, right? Use your API.
Right.
You know, because that's not what obviously a limit order or a stop order doesn't do that. And you're going to be left staying up till late hours of the night. And I think he was in Pacific time zone, so it would be like 2 a.m. for us.
So I love this view on Bitcoinity. You guys seen that?
Oh yeah.
Yeah. This view is just cool and gives you really good insight. So right now I'm looking at a 10% price change in Bitcoin and what it would require in terms of selling or buying on the market to make that price change.
And this is what I'm talking about. The signal's not matching up anymore, right? So when I started using this view, which I thank you very much for showing me.
Yeah. I
was playing with this rule where I said, if there's a 2-to-1 ratio of the right side of this to the left side,
yeah,
on you know, at 0.5%, 1%, and 5%, you know, it's a short-term buy opportunity because the order book's just stacked in favor of being triggered to the right, right?
Right. Yep.
And that was working.
Yeah.
In, you know, mid to late January through most of February. And like for the last 3 weeks, that's been turned upside down. It's not a reliable indicator anymore, at least for the times that I've logged on and tried it.
Yeah.
Right? I mean, I was looking at that in conjunction with other technical signals on the TradingView charts.
Right.
This is like my standard setup here. I have my 15-minute.
Yeah.
I have my 1 hour. I have my 4 hour. I have my 1 day. I've got my Bitcoiny price, you know, depth chart, and then I've got my GDAX exchange, which I'm not going to open because I don't want people to see my holdings on air. And so it's sort of my go-to arrangement, and you know, like this is, you know, everything looks sideways on any kind of a normal horizon on the 1 hour chart right now for the most part. And I make sure. So 4 hours, what's been really the most reliable in terms of the length of trends, right?
Right.
So these up and down movements are kind of bankable here, and you can hold on for a while or stay out for a while until you see a reversal. And then the last couple of weeks, it's kind of gone to pot too.
Mm-hmm.
Especially with the amount of up and down here in this downward trend, right? I mean, these are pretty wild excursions compared to the previous
dynamics of a shakeout in the greater market, right? So you've got all this downtrending. You get all these people that are starting to look at like, oh man, I'm only at like a little bit above where I was in November, and I'm taking a chance on this crazy alt. Maybe I should just consolidate Bitcoin. And then some people might just hold their Bitcoin, or some people are selling out completely. But like I said, you know, that sale in the Bitcoin market doesn't affect it as much as it affects the value of the alt that was sold out. So I'm hoping, and I'm guessing that we're kind of close to the tail end of that, and we're going to start to see not necessarily a huge turnaround. I think we're going to see Bitcoin creeping up, but I think we're going to watch that continue to diverge from the rest of the market. You know, looking at Ethereum, Ethereum's down to half its Bitcoin value compared to what it was in January.
You don't have to tell me.
Right.
I was mostly in Ethereum at the beginning of January.
Oh, really? Yeah, I sold the rest of my Ethereum at 0.12.
Oh, yeah, in terms of Bitcoin.
And then I bought a little bit back in at like 0.095. But I only bought like a small amount compared to what I was holding before. And I'm watching this trend, waiting for it to go back down. I'm guessing that it's going to go back down under 0.05 Bitcoin price. And I don't know, like I'm nervous about Litecoin, you know, with Bitcoin transaction fees coming down, it really challenges the position of Litecoin as like an alternative, and reinforces the position of Litecoin as really just a financial tool to hedge against the fluctuation of Bitcoin.
But what are Litecoin transaction fees doing?
They're pretty low still.
Do they move the same with Bitcoin? I mean, is it a function of where the mining emphasis is going?
No, Litecoin's had SegWit active for like a year. Seth, you're muted.
Hi.
Hey. Somebody's saying something, but I didn't hear much.
I was talking to my wife.
Yeah, so you're saying the Bitcoin transaction fees are coming down now because SegWit because the major exchanges have turned on SegWit finally.
Yeah. Yeah.
Yeah.
Even like my Mycelium wallet, like I was looking at that. My Mycelium wallet, the fees have gone down to like 80 cents for a.
So for new viewers, shall we jump into a little excursion of what segregated witness is?
Yeah, go for it.
Oh, well, I was hoping you would.
All right. Well, I'm a little rusty on it because it's not fresh, but segregated witness. Let me stop the presentation here. So segregated witness ultimately is a method of removing the witness data from the transactions. So once the transactions are combined into the block, there is some witness data there that is part of the transactions that are basically being moved into another section of the block and sort of looked at differently as being not part of the block size limit of 1 megabyte in terms of how many transactions and how much data can be stored in one block. So this
segregated out the witnessing data off chain, basically.
Right. Yeah.
But yeah, I thought that's what you would explain to viewers. But you paused the presentation?
Sorry?
You paused the presentation?
No.
Oh, I'm sorry.
No, I just took my screen back off.
Oh, okay. Great.
Yeah. So in a nutshell, though, what that means, to the users is that more transactions can fit into block. So there's less demand for the space in that block, which means less cost for the transaction. Now, that alone isn't necessarily the only thing that's reducing those fees. Also, batching transactions has a big impact because there's still this capability of the exchanges to actually batch a bunch of transactions into one blockchain transaction. And I think it's a combination of those that has really come together between all the exchanges, turning on segregated witness and batching their transactions.
Right. And so just another level of explanation, right? So for a given block size, if you strip out the witness information, you can fit more transactions in. And then when someone gets a block reward for solving that block, that's distributed over all the transactions in that block, which are more now. So your denominator is higher, which is why your transaction fees go down. It's also why your transactions clear faster, because every block has more transactions in it. When someone finds the nonce that works, solves it, gets the block reward.
Correct. Yeah. And then also with batching transactions, I'm not as familiar with the technical side of that, but pretty straightforward. You could have, hundreds of transactions, and then you batch them into, 2 transactions on the blockchain to essentially summarize all of those transactions into the net result.
Yeah, and so SegWit was implemented. It's the same blockchain, right?
Yep.
Back in August of 2017.
Mm-hmm.
But the major exchanges, because they have all this infrastructure dependent on stuff and all their code written around the core code base, had not implemented it widely. So there was a lot of users, like the node I was running here was running SegWit. And this is not to be confused with SegWit 2x,
right?
Which was going to change the block size also, and never got off the ground. But anyway, just trying to give the backstory to anybody who might be reviewing.
Yeah.
And it was recently that Bitcoin was getting all this heat for having slow transactions, high fees, and everything. And really, the problem had been solved technically, and the technical solution hadn't been adopted by the people who were driving most of the traffic.
Right.
And that's finally been cleared. And I can see, in the frenzy of, the buying frenzy of last Thanksgiving and Christmas, they weren't going to want to just switch off their exchanges and test a new software base, right?
Yeah, totally.
So,
yeah. So now we're back down to pretty low fees. I mean, they're still, they could use a little lower, but at the same time, it is what it is. But last time I was checking my Mycelium wallet, I think I tried to do like the maximum fee just to see how high it would go, and it was like 83 cents. So that's pretty good. So if I do a send here,
still a bit much when you're buying a $2 cup of coffee, but
but that's for a high priority, right? So yeah.
This is true. You can wait you can wait a couple days to verify a cup of coffee.
Yeah.
So the vendor should be
telling me like to send half a Bitcoin, it's going to cost me 50 cents. But if I don't mind waiting, right, the lower priority option, it's offering me a 6-cent transaction fee. So that's always nice to see.
Yeah. Less than state sales tax in Vermont.
That's right. Now we just need to pass all those laws Wyoming's passing.
Totally. Maybe that's why they're not doing anything. They're just like, screw it, they already did it, so just rubber stamp it. Who knows?
Well, I was thinking, so in other news, I was thinking of driving up to Plattsburgh and seeing if I could pick up any ASICs for cheap on the street.
Yeah, some used miners. Yeah.
Yeah, with miners shutting down up there.
Yeah.
Well, so interesting. They've, at first I was kind of against the move that they made, right? Because I was thinking, well, that's kind of backwards and not really forward thinking.
Yeah, so why don't you just give a little synopsis of what the move was that was made here?
Yeah, so first of all, they've issued an 18-month moratorium on mining business applications. So any company that wants to go into Plattsburgh and start a mining operation, they basically said, no go, you can't do it. Because they apparently overran their hydropower allowance and into surcharges. Now, whether or not that's directly a result of mining is questionable. I didn't see anything in the article that actually demonstrated how they've made this correlation to mining. There was no company cited that's crypto mining or anything like that. It almost sounds like somebody's talking about mining and then they went over their allowance and then somebody made a connection
Yeah, convenient scapegoat. Must be those crypto miners.
Yeah, like I don't know of any. Like I would think that maybe I might have heard of a crypto company in Plattsburgh. Not 100%.
Yeah, and this is the first I've heard with this news of anybody, you know, that there was even a thing going on in Plattsburgh where crypto miners were locating there because of cheap hydropower.
Right. Yeah. So
it's really surprising.
Really interesting. So I'm curious how much of that's propaganda, how much of that's you know, something unrelated to crypto, and then again, how much of it might really just be a sales pitch, right? Maybe they don't have anybody applying, and they're like, well, maybe we'll ban it, and then they'll want to.
Yeah, it does bring focus.
Yeah, so it's definitely free publicity, right? You just send out a press release to all the news outlets that says, we're banning all these crypto miners who are using all this cheap power that's here in Plattsburgh.
Yeah.
And then you lift it, and everybody moves into Plattsburgh thinking that it's cheaper.
Well, that's just it. Is what I'm thinking is that here's the good side, right? They're banning commercial mining facilities. So that means all your resident Plattsburgh people can fire up a miner, no problem. You know? And is it really gonna, you know, like spike their hydropower costs? I don't know.
I think it could, depending on how large it was.
But you know, somebody wants to drop like $50,000 to run a bunch of miners in their apartment to, you know, burn that much power. They're also probably going to be buying a few coffees in town and paying some sales tax and
you know, maybe picking up a used car or something.
Yeah. You know. And considering New York charges what 8.5% on, you know, I think they're going to make out just fine no matter how it works.
That's great. Sure.
All right. Well, guys, we're hitting 8 o'clock. I think we've rambled enough about the Bitcoin markets and perceived downslide. Ready to?
Well, it all depends on the time scale you're looking at. You know, things are looking real good on the 1 hour and the 4 hour chart right now. As long as you don't just put in and forget about it.
Helter skelter.
Keep your eye on the 1 day.
Yeah, or just hold it and forget about it.
Or just hold it and forget about it.
I mean, at least it is Bitcoin. If you're holding other stuff, I'd get out.
Yeah.
No, not completely. I'm still 75%. 70. Well, okay, it's creeping up because I haven't made a trade. And,
well, have you noticed whether IOTA has been suffering as a consequence of their public feud with the
you know, I haven't watched
the digital currency initiative at MIT?
I haven't watched that much, but I have an email saved from the MIT group that I've been meaning to catch up on. But let's see, IOTA, they've suffered a little bit. They took a pretty hard hit back in the 17th, 18th. They continued upward.
It looks like it's following the general trend of all the alts, though, really.
Yeah.
I don't see. So their feud started around the 16th, and they actually were rising in price till about the 18th.
Now, did you read that bit about Japan running a transactionless Lightning network for Bitcoin to have electric charge cars handling their transactions with the charging stations?
No.
That's a good idea. It really is.
It also kind of blows the value of you know, things like Tangle or things out of the water if we're able to do this with Bitcoin and have, you know, very straightforward ledgers. So
yeah. All right, sorry, we started extending again after 8 o'clock.
It's all good. It's all good. We've had a good time.
You can edit
it. Guys. Hey, thanks for joining us. Thanks to any of our audience that joined us today. We appreciate your attention and your studious effort to learn. Join us next week, same time, same place. And keep an eye out. We might have some surprise videos pop up. Got some potential interviews coming on, some off schedules that we can't fit into the typical viewing hour. So thanks again, guys. Have a great night. We'll talk to you soon.
See you.
Guys.